Hey everyone, welcome to the show. I'm Kareem Imo. I'm Chief Strategy Officer at Freedex. I'm here with Antum Golub. He's Chief Business Officer at Freedex.
Thanks very much for having me on the show. Let's have a blast.
Awesome. All right, we got a lot of interesting topics today. We're going to talk about MicroStrategy. We're going to talk about Bitcoin. We're going to talk about memecoin and a couple of other interesting topics.
Enjoy the show.
Awesome. All right, Anton, let's talk about crypto ETFs. What are your thoughts about BTC ETFs, XRP, Solana, anything else that's going to end up potentially getting approved in the space?
Well, my biggest success story for the crypto industry and this and last year is the spot Bitcoin ETFs. How many billions did we get into the ETFs? I think it was something like 50, 60 billion. More successful than the gold ETFs time-wise. So it took us like 1 year to be bigger than the gold ETF. I think that's quite a big success story, right?
But why would anyone buy a BTC ETF when you could just go out and buy it in the spot
If
market?
you're a crypto native person, you should never buy ETFs, right? Because it's a wrapper, it's not the real thing. If you want to get the real thing, you need to buy it by yourself, hold it by yourself, or hold it with an exchange or a custodian, somebody who helps you. But if you're a crypto person, you would never buy an ETF. Who would buy an ETF? It's your professional, institutional, boring investor, a pension fund, somebody very traditional who can't open a wallet, can't open an account with an exchange, or doesn't know how to do it. They would buy an ETF. But otherwise, why would you do it?
So if you're a true crypto native, you should buy in the spot market or a swap trade and not buy an ETF. That's what we're saying.
Yes. So open that account on an exchange, on a trusted exchange. Go to the exchange you trust, you like, you think they're really, really good players. Get yourself an account with them. Be very careful how you buy cryptos, so do it a bit cautiously. But the way to enter into the crypto industry is actually by doing it. You cannot watch it from the sidelines.
So let's assume I'm a pretty lazy and passive investor, right? With those circumstances, would I want to purchase an ETF? What would be the benefit for me to to do that?
So ETFs are a simple way that you can buy. You can get exposure to Bitcoin through your brokerage account. So if you have, if you are in US somewhere around the world and you have already an account with a bank and they give you access to purchase stocks or whatever, you can also just insert the ticker for the Bitcoin ETF and then you purchase it. The benefit is actually it's easy to do the transaction. You click a button, you get it. It's safe and secure, or at least that's how they market it, right? And it's fairly cheap to do it, right? The costs of these Bitcoin ETFs are actually quite low. That's how they do it on purpose. Right? So I think that's the added benefit. And especially if you don't know how to deal with crypto directly, you can do the ETF.
Fair enough. So that was a lot about the Bitcoin ETF that has been doing quite well. What about your thoughts on approvals for other ETFs in the space like Solana, XRP?
So just to mention, we also have the Ethereum ETFs who are nowhere near as successful as the Bitcoin ETFs. There's many reasons for that because I think like most of the people don't understand Ethereum. Because if you talk about Bitcoin, this is your digital gold, right? This is how we always explain it. What is Ethereum? Global decentralized computer. Most people can't understand what that means, right? So the narrative is very difficult. Now, if I go about to XRP, I think XRP is your corporate institutional banking crypto. This is how people understand it. And Solana, what is Solana? This market cycle is like the meme coin blockchain, right? So people, I think like we maybe might understand XRP, Solana, Cardano. Cardano is your like professor academic blockchain. That's how they market themselves. I think it's going to be difficult for most people to understand it who have never been in crypto. I think we're going to get the ETFs, both for Ripple, for XRP, for Solana, for Cardano, all these other guys. I think it's going to be a huge loss if you're a big blockchain, you big crypto project, and you don't have your ETF. Huge loss, huge problem. And I see a lot of the foundations, a lot of the protocols projects, they're going to get their ETFs.
So the thing is too with these ETFs, a lot of them are just simply exposure into one of these assets, right? What about potentially having ETFs that were a basket of goods? I think maybe in that case, there might be a little bit more benefit versus just getting indirect exposure for one asset.
To be honest, I think this is equivalent to the S&P 500, For instance, you get exposure to the whole economy, for whole US economy if you buy that. I think if you do that with crypto, you get exposure to whole crypto. I don't think not sure how many people want to do that because I don't think they understand it, to be honest, Kind of like when you do a S&P 500, then you're like, I get the tech stocks, I get the consumer stocks, I can kind of understand it. But if you tell them, I get exposure to digital gold, but decentralized finance, all these other blockchains, I think there's a lot of added value to maybe increase or reduce volatility or reduce risks. But look at the numbers, these kind of products don't have a lot of success so far.
So you're saying if you, as a crypto native, I guess you've been in the space for quite a long time, you wouldn't necessarily champion for an ETF that had exposure into all crypto assets.
Yeah, I think this will not be my first choice, to be honest, because also the question is then, okay, but if you have a basket, if you have an index, how do you weight each one of them? Do you put 50% of Bitcoin and do you put 99% of Bitcoin? Why do you put one or the other, right? So I think there it's a bit difficult to define it, understand. You can have many different weightings. You can have competing products where you don't understand the benefit. So as a crypto native, it wouldn't be my first choice. But I think, let's say, talk about the user who comes to an exchange and wants to get exposure to a few more coins. Imagine if they would have an opportunity to tap a button and get exposure to, let's say, 5 top cryptos in a very simple way, equally weighting. So 20%, 20%, 20%, 20%, 20%, right? So 100%. I think that could be easy and nice.
All right, awesome. What's your scandalous prediction for crypto ETFs?
I think that some of the biggest cryptos on the planet are not going to get their ETFs. Or if they get them, there's not going to be any demand. I think we were going to really then maybe expose which cryptos and blockchains have an appetite for the wider mass, the public, right? The everyday people, and also who actually have good communication skills. Because when you're a crypto, you need to communicate nicely to all these people who want to buy cryptos. So I think we're going to have a lot of failures. Launching an ETF, getting zero traction, it might kill a blockchain because you don't get liquidity in.
That's what you want to talk about, Michael Saylor.
The biggest risk for the crypto industry in this market cycle is Michael Saylor.
I think he's a great guy.
I think he's a horrible guy.
No, I actually agree, but would like to hear your thoughts.
So I have nothing personally against Michael Saylor, but I think what he's doing is actually, he's making it sound like he's providing exposure to Bitcoin for everyday people, for institutions and so on. But if you take a closer look, if you're an insider, if you're a professional in the crypto industry, you've been like you and me, been in the industry for 10 years. If you take a look at what he's doing, he's just creating leverage in the industry. And we know, coming from crypto for a long time, leverage creates risks and then results in a blow up. Now, I'm not saying I know when it will happen, but I see a lot of leverage. I think Michael Saylor, personally, have nothing against him, but I think he is a huge risk for the industry. Also, his personality. When you see how he behaves, he's very confident about himself, very outspoken. I think he's great for the public, great for the masses. People love him because he's like an idol, almost like having a cult around himself. But I think he's doing that to hide the risks.
Well, he has to be confident if he's raising all that debt, right?
Yes. So he's raised how many? I think Michael Saylor, besides Satoshi, is one of the biggest holders of cryptos in the world. Imagine such power, imagine so much money inside, imagine being so confident. Sometimes he's also a bit so arrogant and not telling people about the leverage and the risk that you're taking. I think this is a huge risk. And nothing personal against him, but I would personally stay away from strategy.
But I thought leverage was one of the reasons why people get into crypto to begin with, right? Like that's the whole reason why you start looking at crypto exchanges to invest. You get 100, 200x leverage.
Yeah, I think for the professionals and insiders, or the serious traders, leverage can be a very, very enhancing tool because you get more exposure, you have more liquidity, more firepower. That totally makes sense. I think if you're an investor coming from the mainstream, from the traditional finance, and then through the stock market, you're getting exposure through a highly complex leverage products, I think that's where the danger is. I'm concerned about the retail. I'm concerned about the newbies. I'm not giving here anybody specific advice, but if you want Bitcoin, don't buy strategy. And don't listen to Michael Saylor.
Fair enough. And give me a scandalous prediction about strategy.
The most scandalous prediction that everybody knows about is that strategy is going to explode. I can't tell you the timing. I'm just 100% sure about it. There's a lot of companies who copycat what Saylor does. So they do the same thing, just on a smaller scale with more leverage and with less experience and less power. And I think what is going to happen is they're going to blow up first. And then the last domino to fall is going to be strategy.
That's actually not that much of a scandalous prediction if you follow Anton on LinkedIn. It's actually one of his favorite people to slam.
Nothing personal against that.
Okay. All right, let's talk about RWA.
What's RWA, Karim?
Real world assets.
Okay, good.
I'm thinking I'm going to buy my house and I'm going to tokenize it and I'm going to sell it to someone.
Wow, okay.
What are your thoughts around that?
How's
it going to work?
I know you don't
walk me through this step by step.
Look, RWAs are a big narrative. Everybody's praising them. So far, it's been a complete failure. Let's just be honest about it, right? If you look at how big RWAs are, let's compare it to Bitcoin. Let's compare it to meme coins. They're microscopic. So there's like 4 or 5 billion of liquidity in RWAs. In meme coins, I think Dogecoin is like some tens of billions of dollars.
Meme coins like mantra? I'm kidding.
Yeah. So if you take a look at how big is RWA, so far it's very small, to be honest, And this also tells you it's not been a success story. If it was a success story, you know how crypto works. You know this. It's all about liquidity. When there's no liquidity, it tells you it's not there. It's not been a success. What's the problem? So I think like everybody who is pitching and promoting RWAs are the people who are not actually involved in RWAs, So you have these traditional asset managers, traditional people, banks, real estate. They go and say, but we need to do tokenization of real estate or tokenization of private equity. But then you ask them, hey, how are you involved? Show me the numbers. You see they're not there. They're from the sidelines, pitching it, promoting it, but they're not doing it. And I think that's the reason why it hasn't been a failure. I think you hinted that there might be technical challenges in the background.
Well, actually, I don't think it's so much about the technical feasibility of it. It's the actual application of it, right? So how are you actually going to legitimize the fact that you've tokenized this asset? And I think a lot of that also comes down to crypto in general. A lot of it has to do with idealism, with blockchain, decentralization, all of that. But is it really decentralized on the blockchain side? Are you able to really tokenize assets and legitimize that ownership of it through an NFT or a token, right?
Look, when we talk about RWA, one of the big things that everybody mentions is fractionalization. So instead of the whole your house, I buy like the door, no one small piece. But the people in the blockchain industry, they pretend like they invented that, like they invented that you can buy a fraction of that. That is not true. You have this on Wall Street, you have this in traditional finance. They have been.
Are those not called shares?
That's called shares, actually. Yeah. So when you buy a share of a asset, right, that means you get a fraction. But the people in the blockchain industry, they pretend like they invented that, right? I think really, if you want to make RWAs a success, there has to be a clear added value, either in terms of the costs. So let's say the cost to purchase a real estate was 5% of the cost of the estate, and now it's 0.5% because we use the blockchain and we use transparency and we use smart contracts. And the second thing, the clear added benefit has to be distribution. More people can access your building to buy it, your house to buy it, than before, and that can be an added value. But until that happens, we are not.
So if I understand your opinion correctly, it's more likely that it's going to work to tokenize a building, a high-rise building, than it is to tokenize my home or my PlayStation.
100%. So I think it's like, let's talk about tokenizing a real estate portfolio, tokenizing a private equity portfolio, giving you access to something where you have very, very interesting returns, maybe with not so high risks, right? And that you can access it, but you couldn't do it before. I mean, today, if you offer to people, you can get 10% interest, 8% interest, 12% interest. I mean, this is really a lot of money. So if you can offer that to the broader public, I talk about public here, not just professional investors, I think that can be a huge success story. But to be honest, we're nowhere there. Real world assets have been a failure so
far. Let's talk about what that missing link might be in terms of actually getting us across that line for RWA. So in my view, it has a lot to do with the government's recognizing legitimacy of those assets. But what could be a potential workaround for us to tokenize real world assets without having the government officially legitimize it?
But let me give you an example why UAE is the best crypto jurisdiction in the world. In UAE, in Dubai, we got a pilot project with the Dubai Land Department and a couple of blockchain companies that are actually tokenizing the title deed. So it means like the thing that tells you you own the real estate, they're tokenizing this, putting it on the blockchain, and people can invest into such tokenized real estate with as less as 2,000 dirhams, which is like $500, let's say, give or take, right? So this is like an amazing example where the government legitimizes it. I think where you don't need the government approval, there I don't have an examples. To be very provocative, I think you need to work with the government on that one. You need to hold hands with the regulators. You need to be a trusted partner. And if you don't work together with them, you will never succeed with RWAs.
So don't get me wrong. I'm not trying to evade like the government in this, but what I'm thinking about is the RWA model where you'd be working with an SPV, where you have maybe a trusted entity, and that's really how the world has been working before blockchain and before crypto came in place. You would have trusted parties that you would be working with, whether it was banks or some other large institution that you partner with, right? So if we were to be still, it's still not decentralized in that way, but if we were to have some flow where we are working with an SPV in the middle, wouldn't that work to kind of circumvent the current governmental challenges?
SPVs are definitely way how we can get around it. At the same time, I think special purpose vehicles are the reason why RWAs have been a huge failure so far. So how did it work so far? How did you tokenize a real world asset? So you would set up a special purpose vehicle. For all of you who don't know it, it's just a fund, nothing special. You set up a fund. That fund buys, holds, and manages the real world assets, and then you tokenize the fund. You tokenize the shares of the funds. But if you think about it, why would anybody buy something like this? Why wouldn't you buy directly just the shares of the SPV, but the tokenized version of the SPV? I think there's a lot of unclarity here, a lot of frictions there, not a lot of reduction of costs. You actually have higher costs. And I think maybe that's one of the reasons why RWAs have been a huge failure so far. Yeah. Let's get rid of our SPVs.
And you have to figure out a way to put those costs of the SPV back into that asset, and then you've got an ongoing depreciating asset. But in the same way, you've got an ongoing depreciating fund when you have all of those fees coming in, your MERs, etc.
We in the crypto industry are very good at charging fees, right?
100%.
Yes.
Okay, let's go back to what you were mentioning about why anyone would purchase this tokenized asset in a roundabout way through an SPV, additional costs, etc. So totally aligned about those additional costs that you'd be facing. But a thought I have about tokenizing assets that are already fractionalized, like shares, for instance. If I were to buy some Amazon stock and I was based in the US, it would be very easy for me, right? If I go to another country, like in the UAE, I could still potentially buy that fractional share, but I need to make sure that my brokerage has access and exposure to US assets. But if I were to tokenize that same share, that Amazon share, and now I have a token of Amazon, I can do it anywhere. I can be based anywhere and still get exposure into that asset.
Yep. So first to mention that the tokenization can provide you amazing access. So US market is the biggest market in the world, but most of the world doesn't have access to US markets. And you gave a great example, shares of Amazon, shares of Tesla. Let's say you want to invest in Tesla and you're somewhere in the world where you don't have the brokerage account, you don't have the sophisticated companies. Wouldn't it be amazing if you can do this through a wallet and through a token on the blockchain, right? So it totally makes sense if you can provide access to products and to shares, bonds, and so on of the biggest, most sophisticated, most attractive market in the world. That's a clear benefit of the real world assets. In that case, this whole very complex situation with special purpose vehicles would make sense, but then it has to be the reason why you do it is because of access and not because of maybe the fee structure.
100%. Stable coins. Everybody loves stable coins. Give me a scandalous prediction about stable coins.
So I think
a hot take.
Scandalous prediction about stable coins is that besides the dollar stable coins, all the other stable coins like Euro stable coin, Yen stable coin, Sterling, all of these other ones will not get a lot of traction. Nobody will want them. And you might say, Anton, how can you say that? How is it possible that nobody will want it? Because like a lot of the world uses Euro, for instance, because like a big market, I think the crypto industry at the current stage is so specific that everybody is so dollar focused, right? So for instance, if we are talking about the price of Bitcoin, what do you say? It's $110,000, actually. Yeah, it is going. I hope, if it's going down, it is what it is, But everybody's so dollar focused. And I think there's not a lot of use cases at the moment for non-Euro dollar stablecoins. I'll give you an example. For instance, a clear example how you use stablecoin is kind of to move your cryptos between exchanges, right? So if you want to move from one exchange to another, so for instance, from one exchange to Freedex, you could actually move USDT and then, you're not exposed to price because it's a stable value, right? But for instance, you don't really have the case that one Euro stablecoin is listed on all the exchanges in Europe, and then you can move them easily around between the exchanges. That's not really happening yet. And still, everybody wants to actually have access to dollar stablecoins. So my provocative prediction is that for the next couple of years, it's going to be only dollar stablecoin. And let me be provocative here, is going to be Tether's USDT and Circle's USDC. Those are the king, and the real king is actually
And
Tether.
why do you think those two stable coins?
they are really good at actually being accepted by the ecosystem in the crypto industry. So all these big crypto exchanges, all these big players, they're pushing in the background.
But are they accepted by the ecosystem, or are they just simply the ones being traded on exchanges?
I think they're just being traded on the exchanges, and then that's the exchange. The exchanges are such powerful players, in the crypto industry. They have a big responsibility. That's why it's so important for FreeDex to carry this responsibility with honor, with pride, and do the right thing for the clients, once we are live. And but its exchanges are the ones who dominate. They're the ones who give products to clients. They are going to be the ones who are going to keep on offering USDT, USDC. I think they might list all these other stablecoins, but maybe put them somewhere, on the 10th page. You have to scroll very far to find them. So my provocative prediction, it's USDT, USDC. The queen is going to be USDC. The king is USDT. And I wish both companies the best.
So do you see stablecoins in general as a medium of exchange, a method of payment more, or just simply a trading instrument?
I think in the developed world, so this is your US, Europe, financial markets like Singapore, Hong Kong, maybe even UAE as well. I think there it's really where it's about trading. It's about moving liquidity between trading venues, brokers, platforms. I think in the emerging markets, there's an amazing use case of remittances, of payments, right? Of getting access into the foreign exchange markets, but through stablecoins. So I think that's the use case for the emerging markets. If I compare the two, I think trading still dominates. So traders like you and me, we're still, the main users of stablecoins. But think about, sending money to your family somewhere. Let's say your family is in Southeast Asia, and you're here in the UAE. Here in the Dubai, we have an amazing big community of people from Philippines. We have amazing big communities from India, from Pakistan. Imagine if they could use stable coins, I'm just saying in the future, to send money to their family, maybe in a few seconds and not in a few days, with high fees, but maybe in a seconds with low fees.
So if only USDC and USDT are going to dominate in the space, why are there so many payments related projects launching with their own blockchain, with the stablecoin as that primary method for payments?
Yeah. So I think that there is a use case in terms of efficiency. Why would you want to have your own blockchain if you launch your stablecoin, right? Because then you can control the minting and the issuance, and you have like logistical and operational advantage. But I think it's like in terms of the ecosystem is so important. Network is so important. So if you have your own blockchain to issue your own stablecoin, but you're separated from that network, I think that's going to be very difficult to manage that. But let's think about the scenario where actually the banks want to launch their own stablecoins, or the central bank wants to launch its own stablecoin or CBDC, right? Then it makes sense that they control the blockchain. They're outside of that crypto network. And in those cases, I would understand it. But if you want to enter into the crypto ecosystem, if you want to be part of the mainstream, offer products to everyday people, you need to go on the blockchain and the public blockchain.
I think, and this might be a little bit of a hot take, but one of the main reasons why all of these companies are going out and launching all of these stablecoin projects is it seems like a no-brainer from a business standpoint, right? You take people's money, hold it in custody, you collect interest on it, interest on other people's money, and then the governments or the regulators say that you're not able to pass that interest down to users because now it's a security. Yes. Right? So it seems like a no-brainer business opportunity if you go out and launch your own stablecoin.
And Karim, you have been asking a lot of questions, so let me ask you a question.
No,
what do you think? What do you think about PayPal's and Ripple's stablecoin?
What are your thoughts around that?
So I think that PayPal and Ripple, even though I like both companies actually historic. PayPal more on the traditional payment sides in the early days of internet. Ripple, obviously, the fourth biggest crypto in the world and as project huge. I think they are going to really struggle with adoption. I think Ripple maybe has a better opportunity because they're trusted by the traditional financial institutions. They have a very good brand with them. You have the Ripple army who is behind this, So, but I think really adoption is going to be something that in distribution is going to be something they have to work really hard on. For PayPal, I think it's traditional guys who are trying to do payments with stablecoins in such direct way. I think this is not the way. Ripple, good friends of ours, wishing them the best, but I want to see adoption.
Okay, let's talk about euro-denominated stablecoins for just another second. So what's it going to take to actually create some scale and hype around that?
So I think MiCA, the European regulation, is a huge challenge for euro stablecoins. Just how the regulators in US structured it is just doesn't reflect and doesn't actually understand how stablecoins work in the real world. You kind of mentioned it a little bit. You get actually the cash, right? You issue the stable coins, and then from the cash you get yield, and that's how you cover your costs. That's how you make money. And MiCA basically doesn't allow that. So European regulation doesn't allow that. They make it very challenging. I think this is another hurdle, another problem for the adoption of Euro stablecoins. I'm really not so bullish about it. I moved from Europe. I moved from Switzerland to UAE, to Dubai, to be part of this amazing ecosystem. Still, I love Switzerland. Switzerland is my second home. But when I see what's happening in Europe, I'm not very optimistic about it. I don't think people meant wrong. I don't think the regulators meant wrong. They meant something badly. But I think they just were...
They're trying to maintain control.
Yeah, I think they're trying to maintain control, and they didn't consult themselves with people like you, for instance, Karim, who are experts in the crypto industry. Because I think people who have been around for a long time know the industry very well. They could give them a bit of guidance how to do it better. And still, let's give them a chance, but not too optimistic.
There's also the fact that if you do move to stable coins as a method of payment, you take away from all of the revenues that all of the banks are making, right? So no more SWIFT transfers, no more interbank fees. You're paying $30 to $50 sending money from Europe to the US. So
very good.
Okay, does anyone like meme coins? Who likes meme coins?
Everybody loves meme coins. And the person who loves the meme coins the most is the US president, Donald Trump.
Yes.
He launched the most.
His own.
He launched it. Can you imagine that somebody told you a year ago that the president of the biggest, most powerful country in the world had its own meme coin? I think we would say this is crazy, but it's crypto.
They'd say this
so
is
nothing
Argentina.
is too crazy. We always can do more crazy, So look, meme coins are a huge success story. I don't know why everybody bashes them. I really personally like meme coins. I think they're highly volatile. You need to be very careful and so on. But I mean, they're an amazing success story. Like you have so many thousands and thousands of meme coins that have been launched. Most of them failed. I mean, that's just how it is. And I mean, obviously it's not good, right? But it's, usually when you try a lot of things, then most of them don't work. I mean, just remember Dogecoin, it's like we had Elon Musk, the most successful entrepreneur in the human history, tweeting about Dogecoin and saying, maybe Dogecoin will rule the world one day. I think it's like he was speculating. But imagine, the most powerful person in the world, the most successful entrepreneur in history, Elon Musk, tweeting about Dogecoin. You have the US president, president of the most powerful country in the world, launching its own meme coin. Then the wife of the US president launching her own meme coin. I mean, come on, there is something behind it. I don't know why so many people are against meme coins. Yes, they're volatile. Yes, a lot of things happen. You have to be very careful. I really want to point out, you have to be very, very careful. But the numbers are clear. These meme coins are here. It's one of the big success stories. And I always tell people, if something is the right fit for you, if you like it, if you have done your research, very important, if you've done your research, and if you think you're making the right decision, cautiously go and do what you think is the best for you.
Well, I think meme coins are probably one of the reasons why I've stayed out of investing in crypto in general. And the reason is because it's zero utility, right? How do you differentiate between purchasing and buying meme coins and just simply gambling?
Yeah, but meme coins are a true example of culture, of tokenized culture, right? It's a community gathering together behind same goal, behind the same idol, behind the same idea, and then that's the only thing that's keeping it together. It's the culture, So that's why I love these examples of Dogecoin, Shiba Inu, all these meme coins. Many times I know it's animals, but it's a community coming together and standing behind the same goal. I really am very fond of it. I know a lot of people then say, Anton, how can you, a guy with 12 years of experience in
20.
crypto, 20 before Satoshi, So how can you say, that you think meme coins are cool? But I'm just being honest. I think it's a very cool story. And, hopefully we have more successful meme coins in the future because we want successful ones. And they evolve into something beautiful. But I think in the future, every celebrity will have a meme coin. So Karim, I know you're a famous guy, so I
have
Karim coin.
About 1,000 followers on Instagram.
Yes, strong. Ex-girlfriends.
Actually, let's take a step back about what you were mentioning with, I guess, Trump's stablecoin. And also, was it the guy in Argentina? The president of Argentina? Yeah. So while with meme coins, I actually think, I mean, my view, I'm not really much of an investor in meme coins because I think they don't really have any utility, but they are fun. They're fun to trade and everyone likes to gamble a little bit. So, but when it comes to government-backed stablecoins, that's actually something I could somewhat get behind on because what's the difference between a government-backed stablecoin and fiat currencies?
Wow, so that's a very strong one, Karim. So we're saying government-backed currencies are similar or same to.
Well, what keeps its value at the end of the day?
I
right?
think one is trying to be stable or slowly losing value over the time. One can lose a lot of value or gain a lot of value over a short time period. Look, I think they're like very different things, But I agree with. I mean, I personally am a bit unclear of the situation where a government issues their own stable coin. Sorry, their own when a government issues their own meme coin.
Well, I wouldn't call it a meme coin to begin with, right? Like what the way I would structure it in general is that you launch a token backed by the government, the same way that you have a dollar currency, right, or a fiat currency. And what the government does is they say, "Trust me, we are going to purchase this fiat currency in the open market and try and maintain a certain price." This is how fiat currencies in general. Or pegged fiat currencies to a different asset like the US dollar maintain their peg because you trust the government to maintain that peg in the open market, right? If you have a government-backed meme coin, the government could still come in and say like, look, we're going to use this almost as a line of credit for our future funding that we might put in towards roads, development, et cetera, and people can still purchase into that knowing that as a line of credit, the government is going to go in and pay it back or buy it back out.
I love how optimistic you are about the government launching meme coins,
I'm totally for it.
Yeah, I mean, we know the example in Argentina where a president-backed meme coins were launched. I think we also had the case somewhere in Africa as well. Don't remember specifically. I think they were less successful. Yeah, I think they were less successful than Trump coin. Or the meme coin issue.
They need to follow through like the Trump administration. Yes, They went all in, tokenomics and everything.
They need to follow
for creators.
Yes, for creators. And then do the tariffs, to show the world, So I don't know. Let's see about that. I think this is definitely a new one. I still think that in the future, every celebrity, every public person will have their own meme coin. I think this is just where we're going. Maybe one day you and I have our own meme coins if we ever get there. With you, with your 1,000 followers, me with my also 1,000 followers.
He has a lot more than that.
Yes, on other platforms. Yeah, but I mean, look.
I actually really like that. That's a pretty nice way. Like instead of going out and selling an album, right? You launch a token and you let the market dictate what you are worth to them, right? Yes. And it sounds a little bit harsh to put your own vanity or validate yourself through a token, but.
Yeah. And if they support you, they can do that through a token actually, right? So all the activities that you do, all this like public stuff that you do, I think they can support you. And again, I think it's just meme coins are really cool. Big fan of them. And hopefully we have more and better ones in the future.
Especially the puppies.
The puppies, the penguins, the budget penguins.
Today is May 28th. So let's close our eyes. Picture this. Fast forward to 1 month from now. 1 month from now, 2025. Is it too late to buy Bitcoin?
It's never too late to buy Bitcoin if you're thinking long term.
It's 110K, right?
Yeah. So I think it's never too late to buy Bitcoin if you think long term. It's only 110,000 now. Why do I tell you this? When I started in the crypto industry, so this was back in 2013, Bitcoin was only $100. Can you imagine it $100 and now it's $110,000? Even back in 2013, people used to ask me, isn't it too late to get into Bitcoin, right? Can you imagine in 2013, somebody thinks that it's too late to go into Bitcoin, too late to enter into crypto. So I think it's definitely not too late. I'm very optimistic about the crypto industry. I think very long term, I want to be a part of this for the next 10 years. And I think it's definitely not too late.
So nothing to do with any companies, brands that you may be representing, but what would be your own personal opinion and prediction of Bitcoin in the next 5 years?
Yeah. So I think in the future, Bitcoin will end up at $1 million. And now the question is just like, how do we end up there?
What is that in market cap?
Times 10. So 35 trillion.
35 trillion. How does that compare? I mean, we can Google search it, but how does that compare to other asset classes?
I think at that point, if Bitcoin is at 1 million, at that point, it will be one of the biggest asset classes in the world. Now, what I want to say is like, how are we going to end up at $1 million per Bitcoin? Are we just going to wake up one day, something really, really bad happened, and now Bitcoin is at 1 million? Or do we over time up and down we go, and then we end up at 1 million. I think that's just the part where I cannot tell you. And I think the worst part would be if something really, really bad happens, and then one day we just wake up and Bitcoin is worth 1 million. But that means probably, a shawarma will cost $100. Like everything will become so much more expensive. And I think that's kind of maybe a worst scenario, and the one where people should be afraid of.
It's interesting that you compare the total value of Bitcoin, let's say, to other asset classes. But it's always been curious to me why no one compares it to different fiat currencies, like the total value of US dollars in the market, for instance.
Yeah, because I mean, this is just my opinion. I think the most people see Bitcoin as an asset, something that appreciates over time. Fiat currencies, they look stable, but actually they depreciate over time because you have inflation. So if you look at the US dollar, it has lost 99% of its value actually over the last 100 years since the central bank in US has been created. So fiat currencies, they look stable on paper, but with inflation, we know they're very, very unstable, and they go down in value. And I think just the Bitcoin is kind of like the opposite. It's like kryptonite for fiat currency. It's Bitcoin and maybe even gold.
Well, it seems pretty straightforward. It sounds like the only thing banks really need to do is stop printing more money, and then they're going to have an asset that's not depreciating over time.
Central banks are never going to stop printing money.
They love bailing out banks.
Yeah. I think that's one thing that we can be sure of. In taxes, in countries where you have to pay them, or in the occasions you have to pay them, and banks printing money. They love printing money.
So let's talk about Gen Zers, right? There's a lot of these Gen Zers that will watch platforms like Instagram, TikTok, YouTube, podcasts like this, and they will come to these platforms for advice on assets to buy, crypto to buy, all of that kind of stuff. And they trust these platforms a lot more than they do Wall Street, right? So why do you think that is?
So the reason why Gen Z trusts more social media and TikTok rather than banks and Wall Street is because you get more honesty, more information, and more truth on social media than when you get with the banks. If you talk to these bankers, and if you talk to these finance people, they will not tell you what's going on. They will have this sophisticated language. They will have these complicated products. They're going to be having fees that you don't understand. And how can you trust these people when you can actually go on TikTok, somebody speaking honestly, somebody speaking from experience, somebody speaking the truth, and somebody's there to help you. And I think in the future, the smart banks, the banks that want to become closer to Gen Zs, I think they're going to be the ones who are going to have accounts on TikTok and social media platforms. I think they're going to give you their valuable information. They're going to tell you about the products they have. They're going to transparently talk about the fee structure and why a product will benefit you, what are the risks. Smart banks in the future will be on TikTok. The banks who are not smart, they will stay non-transparent, they will hide things from you, and they will stay on Wall Street. The future is in social media, and especially in AI. In the future, AI can even analyze the product and tell you if they're good or not for you. It's going to be so important that Gen Zs and people trust you as a bank, and you can only do that if you're transparent and honest, if you're the real you.
I actually read a stat not too long ago that ChatGPT's IQ is about 155 right now.
I'm a big believer in AI, and I'm a big user in AI, so I try to use AI every single day. I still don't use it that often actually in crypto, but I use it in everyday life to try to get the right information, to educate myself, to get the right insights or get the right research. So I'm a huge fan of AI. I think in the UAE, we're very blessed. There was just yesterday an announcement that every person in the UAE is going to get access to ChatGPT Plus through a collaboration of ChatGPT and the UAE government. Imagine the first government in the world is UAE, and they're giving access for free to every person living in the country to AI. This is the formula for success. Give AI to the people, and you're going to have a better country with smarter people with a lot of success.
I love that. I actually had no idea I was about to get free ChatGPT Pro Premium. Plus. Is that below Pro?
Yeah.
Anyways, just taking a step back on that, I actually think there's a great intersection between blockchain and AI in general, right? So one of the reasons why I do like to use AI in general as an assistant for me, right? So instead of me preparing the whole script of whatever it is that I'm trying to prepare, I can get my assistant to do most of the work for me. But one of the issues or risks around that is that when you are feeding the AI all of that data, now some third-party company has access to all of that data. And where the intersection between AI and blockchain becomes interesting is that you can actually segment that data and not have to have trust in a third party not to share or use that information that you've been providing. You can put it on the the blockchain, make sure that there are smart contracts in place to segregate this data. It belongs to you and nobody else, and it can be feeding its learnings through an external learning module. Sorry if that's a little bit too hot and heavy. Thanks for coming. Great first episode. We'll be doing a lot more of these. Remember to like and subscribe to our channel.